Morning, everyone. I am Shakura Khan, an educator at Boston City campus. So today I will be the host for the live session regarding your favorite module, HAUD332-1. So I want to make you aware that the session will be recorded and the recording will be made available later on call campus. If you have a question, please pop your question into the chat box, or alternatively, contact your educator after the session has ended. So your presenter for today's feedback session is your educator, Thamina Abrahams. She is a CASA and an expert in this module and all things audit related. So without further ado, I'm going to hand over to you, Thamina.
Thank you, Shakura, for that introduction. And I want to welcome all the students and I want to thank you for making the effort to attend the session. And I hope it uncovers uncertainties you may have with regards to your FA1 assessments. So as Shakura mentioned, I am your educator, Thamina Abrams, for HAUD 332-1. I am a qualified chartered accountant with over 8 years experience in auditing and accounting, but I have 16 years of work experience as well. So I was a distance student myself in my degree year and my postgraduate years, and I completed my psycho exams also whilst working. So this is only a testament that all of you can do it with perseverance and hard work. So let's carry on and go through our FA1 feedback session. So in these slides, we will address the overall common mistakes students make during the FA1. We will go through the requirements for FA1, and I will provide some recommendations on how to address and respond to certain questions identified as issues by most students. So the overall mistakes that is usually made is students do not look at the mark allocations. If your mark states 10 marks or 15 marks, then you should have about 10 to 15 bullet points because it's usually 1 mark per point. The other thing is if it's purely theory, if it's a question required that asks for theory and it's theory that comes straight out of the book, then usually it's a half a mark only. Most students do not apply and they only theory dump what in the responses. The only time you're allowed to use theory is if you can see the required is actually a theory type question. Then, before you go through the scenario, first read all the required below each question. So if question 1 have got 3 or 4 questions, first read all the questions or the required, and then you go to the scenario, because I will show you as you read the required, you kind of get an idea of the things that we might ask you in the scenario, and also it helps you and it preludes you to what you should be identifying in the scenario as you reading the required within with the scenario. Then the other thing is sometimes or most times students provide unnecessary responses and that's not in the required, or students with duplicate responses. So we'll see a lot of time in auditing there will be the same response for like different bullet points, but it's kind of saying the same thing. And then please ensure you complete all your questions, especially for FA1 and FA2. And then with regards to the FA1, I've noted that the questions that had less than 50% average was question 1.1, which related to the impact issue 1, the impact that issue 1 will have on the audit opinion, then 1.2 that related to the subsequent events, and then 3.2 that related to the influence on the audit report for the going concern. But we will be going through all the questions so you can see where we identified these issues. So as you can see, question 1, we begin with the required. So I went straight to the required and I have the required displayed here. So 1.1 was with regards to issue 1, discuss the reasons that the impact of that issue will have on the audit opinion. So these were bolded, so I can kind of give you an idea of what we're looking at. So here you knew you had to go to issue 1 and only had to discuss that particular issue. 1.2 was about issue 2, and we said discuss the impact that the annual financial statement will have in terms of ISO 560, which was relating to subsequent events. So here you can already see 1.1 is issue 1, 1.2 is issue 2. Then 1.3, we said with regards to the main supplier information, describe the order procedures you'll perform with regards to ISO 550 related parties. So there you knew that you had to go to the information under the main supplier, and you had to look at the related parties or the related party transactions. And we said you must structure your responses by stating the director's interest in the contract for 2 marks and then related parties for 13 marks. And then the last question part of the required for 1.1 was 1.4, that was relating to the internal audit department. So it's aspects that the external auditors will need to consider when they want to make use of an internal auditor, and that is by determining the nature and extent of the internal auditor's work. So that was the 4 questions that was required by by question 1. Now we go to 1.1. 1.1 was the question most students struggled with. So as we said, we had to discuss issue 1. If you look at issue 1, there was things you had to identify. Issue 1 stated that the trade payable balance that had a balance of 25.3 million in the final trial balance was understated by 9.5 million. So this is a good exam technique, is to highlight things either with a highlighter or asterisks with color pens, etc. It's just to highlight important information as you read in the scenario, because as you're reading it, you have to read it and contextualize what you're reading, or understand what you're reading and understand the problem or the issue of what you're reading. So in this scenario, you can see that trade payables was understated, meaning that 25.3 million have to be plus 9.5 million. So which means we have to increase trade payables, and you have to discuss them. And as an auditor, they did discuss the matter with meltdown management. However, the management refused to make this adjustment to the financial statements. The other important thing you had to note was the final materiality was 6 million rand. So you can see there that that understatement of 9.5 million exceeds your 6 million rand. So these were the kind of things we had to identify with issue 1. Now, this is recommendations of how to approach when you see a question where you have to provide an audit opinion, right? Whenever you see you have to provide an audit opinion, I always like to use this step approach in order to address an audit opinion. So as you can see, the average for this was 46% amongst the students that submitted. So therefore, I feel like if everyone must not go through this approach next time, you guys should be able to pass it with over 50%. So first of all, you first identify the issue. So here the issue was that the trade payables was understated by 9.5 million rand. Then you have to say, is it factual, projected, or judgmental? Is the misstatement or is the issue there? So factual means it's a known issue. You know it. In this case, it's factual because it's known to be 9.5 million. Projected is usually if an auditor find an issue in a sample and they extrapolate the error. So for example, say the error is 10 rand out of 100 rand. So they'll extrapolate to see how much is that 10 rand over the full population, and that's projected. And judgmental is when it comes to estimates. So then if the scenario had to go around estimates, you would have said it's judgmental, but in our case it was factual. Then you have to say, is it quantitative? Quantitative, I always think of quantity. So is the amount above or below materiality? In our case, you saw materiality was 6 million. The understatement was 9.5 million. So it was above the materiality, meaning it was quantitatively material. So therefore, when you say it's quantitative material, you have to say it's quantitative material because the 9.5 million understatement of trade payables exceeds 6 million, and therefore it is quantitative material. Then you ask yourself, is it qualitatively material? Qualitative, I always think of quality. And when we say quality, we think of, is it non-compliance with IFRS or Companies Act or any other laws, example, the Tax Act, etc. So in this case, it is non-compliance to IFRS, but importantly, it's also non-compliance because the liquidity and solvency tests, like ratios, will be now incorrect because they're understating their liabilities. So there you'll say it is qualitatively material because it's non-compliance to IFRS. It can it gives a wrong the like address it won't give a fair representation of the financial statements to your users, as well as it will then also affect the solvency and liquidity ratios of the company. Then the next step would be, did the management disagree or not? In this case, in the scenario, we said management refused. So it was a disagreement with management. So you state that it was a disagreement with management and they do not want to um, amend the financials or pass this journal. Then you ask yourself, is it pervasive or not? And why is it pervasive or not? So here you, what does pervasive mean? Pervasive mean is when even error affects a lot of entries in your income statement and financial position, then it's pervasive. But in our case, it is not pervasive because it only touches two accounts, which will increase trade payables and decrease expenses or cost of sales. So in our case, we would state it's not pervasive because it only affects two accounts, and that's about it. Then you provide a recommendation as an auditor as how you would go about to go fix this, or what would you tell the client? How should they go fix this? So there you'll say you'd go to the client and ask the client to pass a journal to increase their trade payables. So you credit trade payables and you're going to debit expenses and or cost of sales, depending on which side it goes, where in the if it goes in expense of cost of sales. So in this case, because we said it's an understatement of creditors, so which means we have to increase creditors by the 9.5 million. So now that we went through this steps, you can see it is a misstatement because it's material, quantitative and qualitative, but it's not pervasive. So in order to determine what is the correct audit opinion, you have to go to your ISO 705 table in your psycho handbooks, and you go see there in 705, you can see this table here in the corner, on the top corner over there. You can see if a financial statement is material but not pervasive, it will be a qualified. If it's material and pervasive, it will be adverse. And then the second block is if there's an inability to obtain sufficient audit evidence. This is the last block. The bottom block is usually if a client don't give any information and you can't perform your audit, meaning that there's a limitation of scope because they're not giving you all the information or documentation that you want from them. So then that will fall in the lower block. But in our case, we would be in the first block, which is as a financial statement is material and misstated as material but not pervasive, and therefore it's a qualified opinion. I love using this block 705 when I have to determine what is the actual audit opinion when it comes to audit opinions. So this is how you address audit opinions, and you'll see most of the time these audit opinions have a maximum or a way more marks than the available because it's a lot that you can discuss. So if you follow this step approach, you will get your full 10 out of 10. Moving on. 1.2 was also discussed was also one of the problematic questions, and this was relating to issue 2, and you had to discuss the impact of subsequent events. So if you look at the scenario says you okay, so this is the beginning of the scenario that stated just the background that you were auditor for the meltdown and they are repairs and maintenance company for a group of apartments, etc. And here it was important to take note of the financial year end, which was December 2023. Then we gave you a auditor's report date, the 15th of May 20. So this is the date that the auditor's going to sign and issue the audit report and sign the financial statements. So usually after year end, you can see it's after year end. Then again, final materiality is 6 million rand. Now we look at issue 2. We said on the 15th of February 2024, the warehouse had an electric issue that sparked an ignited fire, and most of the inventory used was destroyed to the value of 7.2 million basically. Then management did not they decided or stated they should not do any changes in the 2023 financial statements as they think that it's happened after year end, so we're not going to worry with it. So what is important here is the fact that the 7.2 million is above our materiality of 6 million. The 15th of February 2024 is after our year end. Okay. Now, if we look at it, overall, the students got 42% for this question. Now, I've done this diagram timeline. this is what you usually use, or to make it a bit easier for yourself, you can use this timeline as a subsequent events diagram, and you can always jot down all the information we give you. So the year end was the 31st of December, so which means the beginning would be the 1st of January. The date the auditors had to submit their report is the 15th of May. The fire happened the 15th of February. So it means it happened after year end. So it's between the two dates of year end and the date of the order. So here you can see it was a subsequent event. It happened after year end. So here, what the way you had to discuss subsequent events was you had to provide us what is subsequent events and give us the two types of subsequent events, which is adjusting and non-adjusting events. Then you had to tell us now, apply it based on the scenario. Is it an adjusting or a non-adjusting? And you'll see, if you had to discuss the adjusting and non-adjusting, you would have seen it's a non-adjusting event because it happened between the date of year end to the date of the auditor's report date. So it happened after, basically after the client's year end. Therefore, it was a non-adjusting event. And then the important thing to note also is that an adjusting event will impact the actual amounts to the annual financial statement. So it will impact amounts in the income statement or in the financial position. But a non-adjusting event, it doesn't impact the amounts, but you will just have a disclosure in the annual financial statements, meaning there will be a note for the users of the Fs, and that note will tell them of the nature of the event and the amount of the event. So in the note somewhere in your notes of financial statement, it will say there that the client had a fire on the 15th of February for the 7.2 million, etc., and explain the information there. So that was how you had to go about explaining 1.2. Then 1.3, a lot of students did well. They or got an average of above 50%. Here, we had to look at the main supplier information and describe the order procedure for related parties. So here you had to understand what is a related party. You could have gone to ISO 550 and see what it is. In the main supplier information, we said that the CEO of Meltdown, Mr. Al Smith, right? So he was the founder and he incorporated Meltdown. So at during the year, the financial year, the board of directors decided by voting that the main supplier for the machinery and repair equipment should be Supply for You. So all the board of directors came together to go vote on and that they're going to use one specific supplier, and that specific supplier was Supply for You. But then when you audited, you went on LinkedIn and you came across that Supply for You, that the CEO of Meltdown, Mr. Al Smith, he has 65% shareholding in that, but that supplier that they want to use as a main supplier. So when we asked you for the director's interest in the contract, what we meant there is there we had to go check to see, did Mr. Al Smith actually disclose his interest of 65%? Because remember, in order for them to have voted, Mr. Al Smith first had to come and say, look, I have got interest in Supply for You because I'm 65% shareholder. So he had to basically make it known to the board of directors that he is a shareholder of Supply for You. And when he makes this disclosure, he's not supposed to take part in the voting of when they decide they want to do the main supplier. Then they want to make Supply for You as a main supplier. So he has to recuse himself from the meeting, meaning he has to leave the meeting and he can't participate in the voting. So that's where the 2 marks came from. So it was just understanding that that was what he had to do. Mr. Al Smith had to do from disclosing his 65% and leaving the meeting. Then the second part was now the related party auditing procedures, which is fairly, it is in your auditing notes for South African students and it's in chapter 17. It's very straightforward because there you must just make sure that the related party transactions is at arm's length. You will review meeting minutes to see whether these disclosures was made and to pick up on any other related parties and make sure that the transactions, etc., it is within business requirements and etc. So those are procedures that does come out of your auditing notes textbook. But there also you had to kind of refine it to the scenario, like make use of the name of the company, like Meltdown, make use of supply for you, like make it a bit just more um, relatable to the actual scenario. Then 1.4. The students did well in. They got the average of 67% a year. You have to you have to ask yourself, how can an external auditor rely on Meltdown's internal auditing department for this extended to reduce fees, right? But here the whole crux of this matter was to look at your ISA 610 in your Psycho Handbooks, Volume 2A, and your Chapter 16 in the auditing notes for South African students, because they ISO 610 give you guidelines as to what you have to look out for when you are relying on an internal auditor. So in order to rely on an internal auditor, or even on a expert, like a client expert, also you'd look at whether they're qualified and experienced. You'll question their objectivity, because sometimes internal auditors, they work so long for a company that they lack objectivity. So you'll look at objectivity, you'll look at the nature and scope of their specific work, and if it's in line with what you want as an external auditor would want to, your objectives of when you're auditing. You ask yourself, is it in line with our overall strategy and audit plan? You look at significant judgments like your risk assessing, risk of material misstatement, um, and evaluating tests performed. You're looking at accounting estimates, you look at the degree of judgment, etc. So all this pointers was in your ISA 610, as well as your chapter 16 in your auditing notes for South African students. Then question 2. Question 2 was just one big question for 25 marks, and here we said discuss in detail the auditor's responsibility with regards to reckless lending practices using the marks below. So we said identify the matter is a reportable irregularity for 10 marks, and then you have to tell us the auditor's responsibility to report the reportable irregularity for 15 marks. So what was the issue here? So per the legal claim in your scenario, it said that they provide Sympathetic Bank provide loans to low-income households without proper credit checks performed. So they were just giving loans left, right, and center with no worries. And this decision was made by the CFO, Mr. Leon Lowe, and the borrowers could not repay their loan. So then the borrowers end up suing the bank, because saying that you knew I have hardship, I'm gonna experience hardship, you didn't do the credit checks, so we don't want to pay these loans back anymore. So they never did the credit checks according to the National Credit Act. And also, you, as auditor, you consulted with the legal department of the bank, and they said it's highly probable that they're going to succeed in this claims, in this legal matter. And you can see that the estimate was estimated, the fair estimate of the legal claims was 65 million rand, and materiality was set at 20 million. So you can see it was above materiality. So yeah, overall average was 58%, right? In most cases, what students did was they discussed the reportable irregularity quite well, but they don't discuss how the auditor reports it to IRBA, the whole 30 days and 3 days, and discussing it with the board of directors, etc. So that was what took place in this question. So basically, what you had to do here was you had to, the first part of the question is you had to discuss what is reportable irregularity per the Auditing Professional Act. Like you had to state, it's an unlawful act or omission that was committed by a person that's responsible for management that's caused or likely to cause material financial loss. Its fraudulent amount to theft represents material breach of any fiduciary duty by management. As you discuss the theory, you apply it. So you say it's an unlawful act or omission committed by a person. So unlawful act or omission. The unlawful act here was reckless trading, because they went to go provide these loans to the customers or to the borrowers without any credit checks. So it was against reckless trading, which is Section 22 of the Companies Act. It was against National Credit Act. It was even against the director in the Companies Act. I think it's Section 76, where it says the director must act in the best faith of the company, in the best interest. And currently, you can see Leon didn't act in the good faith of the company, because he ended up he was the one that approved it. So when you say committed by a person, you state it was by Leon Smith, or Leon Low, sorry. And then that's how, so you mention it, you apply it, you mention it, you apply it. Then, as I said, when it came to the actual report now, the 15 marks, there the students went to go give me audit procedures and all those things. And all you had to do there was to tell me now, you're going to report it with no delay to IRBA. You're going to within 30 days, within 3 days, you're going to go to the management and explain to the management, give them time to represent themselves and all that whole process. And then again, send another follow-up letter to IRBA to say that it's still happening or it's not happening, etc. So that is what you had to answer in question 2. Then question 3, this was the last question, where it was about there you had to discuss the appropriateness of going concern assumption. Here we told you you must give us the negative aspects and the positive aspects and conclude. You can see it was 7 to 1 mark, because 7 points, 2 points, 1 point. Then the second question was discuss the possible influence of going concern issue on the audit report. That was for 7 marks. Then the third question was you had to provide an extract of an audit report showing the audit opinion based on an adverse opinion. So yeah, I told you, based it on an adverse opinion, and that, and assuming that Games is considering liquidating. So here in this question, I told you you must base it on an adverse opinion and with the assumption that they are gonna liquidate. The structure here was you had to give me the include in the adverse opinion section within the audit report, and you had to give me the basis of the adverse opinion section, which was for 3 marks and 5 marks. So yeah, students did very well in this question. They got 82% on average, right? Because I think everyone know now that within the scenario, you can identify what is negatively going to impact your going concern and what is positively going to impact your going concern. So everyone know what's going concern. Going concern, when we say financial statements is based on a going concern assumption, we mean that the company will be able to still operate in the next 12 months after year end, or in the foreseeable future, basically. So meaning that they're solvent, they'll be able to make profits, etc. So in our case, there was quite a few factors. You'll see I highlighted the negative ones in orange. So when you're reading a question like this, you can highlight like negative maybe in red, or red pen, or make asterisks in red, and like, or have a green highlighter for the positive. Then here at the bottom was just something I wanted to make note of, because this actually affects or impacts your second question, but it also would have impacted the first question as well. So as you can see, so the negative was that the supplier in America retracted its contract from this gaming industry, or from this company, and they basically, because of they basically retracted from the contract. The games will now make a severe loss on revenue, right? And then because of this, it resulted to them closing their stores. They had 150 stores and they only now have 60 remaining. And they stated there that the American supplier presented 45% of their revenue. Then the other thing was that year, and even though the supplier retracted, they still owed a material amount of 2.5 million, and they had to take out a loan by the bank for the 2.5 million. The positive in this scenario was the fact that management made the assessment and they feel that they won't be a going concern because they have this new online platform that they're going to start implementing. Then they also partnered with a new supplier in China to recover for that contract that was made or retracted from in America. Then the last part here, it was basically just saying that management refused to give you any going concern assumption assessment statement. Then on the next page, I gave you a set of financial statements. Here you had to analyze. Whenever give you financial statements, you analyze it. So, for example, you can see in 2022 financial year, we made 10.5 million. In 2023, we made 9.2 million. So it was a decline. So you could have even said that's what's in orange because these were all negative impact. So there was a decline in sales. There was a loss made of 1.5 million. See, in prior year we made a profit. They budgeted to make a profit, but they ended up making a loss. And you can see the current assets is lower than the current liability. So the current liabilities exceed the current assets, meaning that they're not solvent and liquid basically because it is the current liabilities exceed the current assets. So those were the type of factors you had to identify. But like I said, a lot of students did well in this question. And you had to conclude because if you look at it, it was also given to you in the mark allocation. You could have seen because there was a 7 factors basically. So you can see that they had a going concern. You just had to conclude to say that because of the issue or the factors identified above, they have got going concern issues. Then 3.2 is also where students didn't do so well in. The average of 46% here, we had to discuss the going concern issues, right, in the report for 7 marks. Now here, yeah, the main key here was the fact that management refused to provide us with a going concern assumption assessment statement. Because the thing is, we as auditors, we need their going concern assessment statement in order to be able to audit it and to see whether they are a going concern, meaning they are going to be able to trade in the foreseeable future. So if they're not giving us a statement, how can we end up auditing something that we don't have? So in this case, it's a limitation of scope, meaning that they're not giving us the information we need to actually audit. So here in this case, the going concern is material because it's quantitatively material and qualitatively material. And like I said, they refused to give us the assessment. Therefore, we couldn't audit this. In this, in most of the responses, students gave me, they never told me what is the actual opinion. They said it can, they like give, they say if this happens, it can be an adverse, or if that happens, it can be a qualified opinion. In this case, the scenario preluded to you to say that there's a limitation of scope issue here because the assessment wasn't provided. So here you had to know it was an adverse opinion, but like, yeah, so here you had to know it was an adverse opinion. It was in essence would have probably been a qualified opinion, but because of the limitation of scope, it's an adverse opinion, and you had to apply it because of them not giving the assessment. So that's how to go about it. And you would, of course, you would have spoke about it being quantitative and qualitatively material, and you'd have discussed about it would have been pervasive. Because remember, going concern assumption affects the entire financial statement. So in this case, it would have been pervasive. Remember in question 1.1, I said it's not pervasive because it only touches 2 accounts. In this case, going concern would always touch many accounts because it's the basis of your financial statements. So therefore, it would have been pervasive. Then lastly, overall students got 57% for this question. This report could have been found in the Psycho Handbook, Volume 2A, ISO 2570, Appendix and Illustration number 3. Because this was for an adverse opinion. Like I said, I stated 3.3, it was based on an adverse opinion with us assuming they are going to be liquidating. So if you look at ISO 570, now if you look at the illustrative examples under ISO 570, this is the appendix that I was referring to. Illustrative 1 discusses if it's an unmodified opinion, meaning it's a clean opinion, there's no going concern issues. Illustrative 2 is about a qualified opinion, meaning there's some modification done because there's some uncertainty existing. Then illustration 3 was regards to an adverse opinion. And this only reason why in our records the adverse opinion because there was a limitation of scope, meaning the client never gave us the assessment in order for us to audit the going concern assumption. So then this over here is the actual extract of illustration number 3. So you could have used this as is and you would have just made the amendments where necessary. For example, by ABC company, you'd have put in the name of the company that we're dealing with, which was Games. Then you would have put in Games financial year in. Then you would have put in like anything that's relating to Games and making sure that games, if it is IFRS or IFRS for SMEs. Then over here, you again put whatever games, and here they said unable to conclude on renegotiation. So you put in games situations, like I know we said they considering to be liquidated. So put in there they're considering to be liquidated. They lost their supplier. So you put all the like the negative going concern um factors in the sentences here that that is hectic, like that's negatively, like for example you necessarily won't put like the loss in here because companies do make losses, but like the big things like the supplier, the material things like the supplier that retracted the 45%, that's material. Them not giving you the assessment is material. The actual fact that they considering to liquidate is material, so all the material things would have gone under your basis. So then that's the end of our feedback session. I just want to leave with you a quote that says, no matter what you are going through today, don't quit, don't feel defeated. You are doing the best you can. Remember, giving up is not who you are. You may pause, take a long breathe, pivot, or find solutions, but always keep going. So thank you again for attending the session. If you have any uncertainties with HAUD 332-1, please contact me on theminaA@boston.co.za, or you can contact me on my direct line on 087 188 So it's now 8:37. So is there any questions?
It doesn't look like they have any questions, Tamina. But thank you. That was very informative. If they later do decide to have a question, they can always contact you on your details. So thank you very much. And the quote was very motivating. And thank you for attending. Yes, that's all for today's session. Hope it has been informative for you as well. Until next time.
Thank you. Bye bye.
Bye.